This is such a predicament of Cirrus research. A few quick takeaways from the latest Cirrus signals report. This is our asset allocation report that looks at stocks versus bonds, small versus large, growth versus value, etc. In this report titled Tactical Readings Still Green Light the High-Tech Chase, it may seem a bit counterintuitive given really a lot of the research that's we've published that suggested the mega cap tech stocks are extremely expensive. So how could we suggest that this run that we're seeing, this fairly robust, is likely to continue? Let me go through a few quick points in terms of the tactical models we're looking at. Number one, when risk appetites are especially high, that's when we find that there is a break in leadership. Right now, our risk appetite reading remains benign. Clearly, it's climbing. However, this could be quite a bit higher before we start to get a red flag. Part two is crowding. Plenty of reference to, hey, seven stocks are really leading the entire market. If you subtract that out, the market's practically flat. Lots of those stories going around. That said, the multiples of this leadership bin needs to be well over 60% premium. Right now, we're just starting to get back to parity, and a lot of this has to do with the meltdown of the last couple of years. So as that leadership basket reforms, this will begin to climb, and in fact, it could climb quite rapidly. But for now, another reason why whatever's going on, it does seem as if this trend is likely to continue and potentially be very painful. And the final point has to do with risk assets. Our asset allocation model has rotated towards an overweight in equities in the last 6, 12 months. This reading remains the case even with the very strong run we've seen in the last few months. Take a look at the full report. In our upcoming quarterly, it'll be coming up. So keep an eye out for that. We'll walk through this quite a bit in more detail. Thank you.